Welcome to my YouTube channel, House of Wisdom. Today we will be talking about the capital expenditure versus revenue expenditure. So, what is a capital expenditure? Any expenditure a business incurred in acquiring a fixed asset is known as capital expenditure. For instance, if a business buy an equipment which costs business $100,000, so the $100,000 is a capital expenditure. So whatever the cost of acquisition of fixed asset the business incurred is taken into account in capital expenditure. Also, it is to be noted that any expense incurred to put the new fixed asset into a working condition included in capital expenditure. For instance, the carriage cost which incurred by the business while taking the delivery from a shopkeeper to their business. So, whatever the carriage expenditure the business incurred is part of capital expenditure. Similarly, if there were other expenses like upgradation of some softwares, some installation cost, some testing cost, so whatever the expense required to put the new fixed asset into its working condition were part of capital expenditure. For instance, in computers, you need installations, upgradation of softwares. So whatever the cost you are bearing in installing those softwares taken into account in capital expenditures. Also, you incurred some legal charges in a very initial period. For instance, you need to pay some import duty for acquiring some asset from a foreign country. So, such expenses were part of your capital expenditure. Moreover, in addition to the acquisition cost and expenses incurred to put the fixed asset into a working condition, any cost which a business have incurred over the time period or the life of the fixed asset to add the value to the fixed asset is also part of your capital expenditure. For instance, if there is a new software updated by a company, so you need such software to be installed in your computer. Therefore, it added value to your existing computer. This also known as a cost which is known as a capital expenditure because it added the value to the fixed asset. Now comes the revenue expenditure. Revenue expenditures are simply the expenses the business paid for running the business, to pay for the day-to-day expenditures which business have to on the revenues for a particular period. For instance, they have to pay to their employees in terms of salaries, they have to pay insurances, they also pay the utilities bills including electricity, lighting, other very expenses which were needed for running the business were called revenue expenditures. It is to be noted here that any ordinary repair and maintenance costs that are necessary to keep an asset in a working condition without substantial improvement to the fixed asset is also called revenue expenditure, meaning whatever the depreciation or the maintenance cost which you needed to maintain the value of a existing fixed asset is not capital expenditure but the revenue expenditure, because the depreciation of machinery or other fixed asset resulted during the time period in order to earn certain revenues for a particular period. Therefore, it is an expenditure for day-to-day running of a business, not or addition to the capital expenditure or addition to the value of the fixed asset, or it's not the expenditure required to put the asset into a working condition. Therefore, it is existent asset. Whatever the expenses required to maintain its value is called revenue expenditure. Hopefully, the explanation you like, you understand the capital versus expenditure differences. If you like this video, subscribe it. If you have any query, you should post it in your comment box. I will be there to help you out. Will answer your comments for sure. Thank you very much.